Hello dear all, Abdurrahman here again. Still on the topic working capital management. We have discussed what working capital management is and the objectives of working capital management. It is the two key objectives of working capital management that led us to this topic of discussion of overtrading and undertrading. So when I discuss the key objectives of working capital management, which are liquidity and profitability, I said that there must be a trade-off between liquidity and profitability. We must strike a balance between the two in order to achieve the aim of the business. What is the aim of any business? The aim of any business is to do what? Is to maximize wealth of the shareholders. If that is the case, therefore, excessive investment in working capital tends to lead us to what we call undertrading, where you'll be having idle fund we are not using. So let me just go straight and discuss the concept of overtrading and undertrading. Overtrading occurs when the business expands too quickly without having the financial resources to support such a quick expansion. What do I mean by that? I said this occurs when the business expands too quickly without having the financial resources to support such a quick expansion. That is to say, the capital employed in the organization is not enough for you to expand those too quickly, just the way you are expanding. So, if suitable sources of finance are not obtained, overtrading can lead to business failure. For example, you want to expand too quickly. You are borrowing short-term fund to finance the operations of the company. By the time the short-term fund falls due, you might not have been able to realize the money in which you invested in order for you to do what? To pay back. And besides, the cost of capital of borrowing, the return on capital, the return on on that investment may not be enough to do what? To take care of of the cost of capital of that borrowing. So therefore, if suitable sources of finance are not obtained, overtrading can lead to business failure. So importantly, overtrading can occur even if the business is profitable. It is an issue of working capital and cash flow. Overtrading is therefore essentially a problem of growth. It is particularly associated with retail businesses who attempt to grow too fast. So, what are those things that we are going to see to say a company is overtrading? Meaning that what are the symptoms? What are the things that we are going to see that a company does not say, okay, this particular company is overtrading? One of the symptoms of overtrading is high revenue growth. You now discover that the sales, when you say revenue, I'm talking about the sales of the company will be very large, very high. Simply explained as expanding the credit period of the business. The credit period given to the debtors, to the customers of the company, expand it. By that, therefore, the customer will buy more. By that, therefore, it will shoot up the revenue of the company. So we see that a high revenue growth is what is a symptom of what? Of overtrading. A rapid increase in the volume of current assets and possibly also of fixed assets. A rapid increase in the volume of current assets and possibly also of fixed assets. You are just pumping money into the organization. You are what? You are overtrading. So if you now discover this, you can tend to see that when the company is what? Is overtrading. Increase in the rate of what? Of short-term borrowing. Increase in the rate of short-term borrowing. You are borrowing the short-term fund to do what? To finance the operation. It's borrowing short-term fund to finance long-term assets. You are definitely what? Is a symptom of what? Of overtrading. Though you are going to report a what? A large what? Volume of what? Of profit. That is what you are targeting. What? Profitability here. You are targeting profitability here, but you are suffering what? Working against what? So overtrading is synonymous to what? You can look at it from the word from the perspective of profitability. So if you're working towards what? High revenue growth, you are going to do what we call the what? A high level of profit, but it does not translate to what? To cash, to liquid. So therefore, that is why we now say they need to do what? To be a trade-off to strike a balance between what? Profitability and liquidity. Okay, significant increase in the payable days and receivable days ratio. Significant increase in the payable days and receivable days ratio. So when you have this, no revenue is coming in for you to do what? The cash is not there for you to do what? To pay. So there will be a significant increase in the payable days and receivable days ratio. Okay, what is now the concept of undertrading or overcapitalization? It's just the reverse of what? Of overtrading. It's just the opposite of what? Undertrading is the opposite of what? Of overtrading. This is the reverse of overtrading. It means keeping funds idle and not using them properly or efficiently. This is due to the underemployment of assets of the business, leading to the fall of sales and result in financial crisis. So what are the symptoms of undertrading? What are we going to see? To now say, okay, this particular company is what? Is undertrading. A very high current ratio and liquid ratio. What is current ratio? Current asset over current liability. You are going to see very high, that is, the current ratio will be very high. So therefore, the symptom of what is a symptom of undertrading. The ratio will be, so when you calculate the ratio, if the ratio is what? Is very high, at least you have more of current asset than what? Current liability. Definitely the ratio is going to be very high. So therefore, it means you are what? You are highly liquid. You are highly liquid. Highly liquid. So it means you are undertrading. You are not using the fund efficiently. So excessive inventory, receivables and cash. So the symptoms of what? Of undertrading. You are just having the inventory, you are just producing, you are not really selling them. You are doing what? You are undertrading. So of receivables to high level of what? Of account receivable of debtors. And also you are having a high level of cash. You just have a high cash. You don't utilize it very well. No turnover ratio. So these are some of the symptoms of what? Of undertrading. So by this, therefore, we can tend to understand the concept of overtrading and undertrading and how to identify them. So for students preparing for examination, this is very key. It's very helpful for you to know what undertrading and overtrading is. At this point, therefore, I'm going to call it a class today. Till we meet next time, we are going to discuss what we know, what is termed as what? Operating cycle. Operating cycle. So what's that for my next video on operating cycle? Still under working capital management. Thanks for listening. God bless you. And if you have not subscribed to this YouTube channel, kindly click on the subscribe button, share the video, like the video, and I'll be glad you do so. If you have any comments, kindly put your comments, your questions in the comment section, and I'll be glad to receive them and respond to them appropriately. Thanks for listening, and God bless. Till we meet next time.